much. Good evening, friends. We are at our last technical session of the day. Since morning, we are discussing many subdomains of the GST, and we are having Rajendra Bhagat sir, who is going to take the procedural and administrative matters how it is to be tackled in the GST. At the transaction level, we all know that these are the matters of routine nature that has to be handled, and there wherein we really require the help. Fortunately, we are having a very distinguished guest, and he is coming with his background. He basically joined the sales tax department in October 1998 as assistant commissioner. Presently, he is a joint commissioner of sales tax, looking after the VAT policy matters for Maharashtra. He has worked in various fields, even in VAT, like assessment, sales tax and VAT, both assessment, investigation, training, and as well as the policy matters. Most importantly, he is actively involved as a state representative in formulating the business processes of GST. So, how the business process is going to be defined in GST from the perspective of government, we can have a good interaction with him, and he himself has requested that if you have all these procedural matters, if you are having any doubts, you can free to ask him, and he will be very happy to help us out. So with this, I welcome Bhagat sir, and offer him a token of appreciation on behalf of WRC.
I invite Mr. Bhagat to address the session, and as we said, you are free to ask questions during the presentation as well.
Token of appreciation should have been given after the end of the session, I suppose. If you really appreciate, then the token of appreciation would have carried a more value. Anyway, it's just a joke, huh? Don't take it. Thank you very much for giving me this opportunity. Whenever I go for a GST seminar, the first and the imminent question that is always being asked, whether it's really going to come. And before anybody can ask that question to me, I'll answer it, I don't know. It's really a 16 or 17, because I always describe GST as a big fat Indian wedding. Like a wedding, you have got so many members, so many players in the wedding. The uncles, the aunties, the bridegrooms, in-laws, everyone. Like that, GST, you have got so many players. 29 states, used to be 28, now 29. Am I right? Yeah. 29 states, one big brother, union government, then small players like states, some big players, big states like Maharashtra, Gujarat, Tamil Nadu, some small states, some consuming states like Bihar and Uttarakhand and Uttar Pradesh. Then some of them are exporting states like Maharashtra, Gujarat. So they have got their own scheme or own agenda to play as far as the whole scenario of the GST is concerned. So there will be a conflict of interest between the exporting states and the importing states. So everybody has its own game plan. Everybody's interests may not be similar to each other. And that is the reason why it is being delayed. So let me make a candid confession as why it is getting delayed. Because you also know it, because why it is being getting delayed. Let's hope that probably 16 or April 16, everything falls in line. Then probably in the winter session, the Rajya Sabha will clear the constitutional amendment bill. Lok Sabha has already cleared it. So if the Rajya Sabha clears that bill, then as you know, being a constitutional amendment, 50% of the states has to ratify it. So you got a little time, but let's hope that if it works in a smoother and a faster manner, then naturally by 1st of April 16, we will be in a position to say the day of light. GST, as you know, is very much essential. As earlier speaker must have told you that as far as this particular GST, the background, this, first of all, in the Kelkar committee report which envisaged what is the GST, although the task force really had given a very comprehensive type of a GST, as you know, as on date, GST is slightly truncated form. I mean, petroleum diesel or the petroleum product as well as the liquor is being kept outside the GST. Naturally, some of the areas which can come under the GST, that's what the Dr. Kelkar's report has talked about, is the electricity duty. The electricity, sale of electricity is also a sale of supply, sale of goods. So it has to come. Then again the stamp duty is also, it's nothing but a tax on the sale of land or the sale of flats also. But that is what you can say is a step forward. It can take its own time. Right now it's only the integration between the goods and the services. So when this particular report came, it actually envisaged very comprehensive type of a GST, including the electricity, sale of land and everything, including the sale of goods. But right now, as a step one, we are starting with the goods and the services. This you must take on. So basically, who are the people responsible for development of this GST? As you know, the Union government, first of all, in Union budget declared that the GST will be introduced from 2010. Then after the work of designing this particular GST, what will be the frame law, what will be the design of GST, was entrusted to the committee called as the Empowered Committee of State Finance Minister. That's popularly called as EC. EC is primarily responsible for designing the GST per se. All the work regarding what will be the business process, what will be the law structure, everything was given to the Empowered Committee of State Finance Minister along with the Union government. So this is a body which is really concerned, and the only official document that is really available in the public domain is a first discussion paper that has been published on the 8th November, I suppose, 8th November 09 or 010. This you must have covered why the GST is really required. It is nothing a harmonized tax structure. As you know, today as on date, the state has got its own jurisdiction, and whole of the pan-India is a truncated form of a market. Whenever you supply to the Gujarat, then you will be required to charge the CST with the CFOM and all that. Then again that 2% becomes a cascading because input tax credit of 2% is available. So per se, India is being divided into various 29 parts at least. So that becomes a very disintegrated form of a market. So what will be the ideal scenario is to make the India as a one market, one single market. And how it can be done as far as the integrated or the indirect tax is concerned is to have the seamless flow of the input tax credit. That is what is imagined under the GST. And second and the important aspect is that what is the requirement of a GST? As you know, I might be talking about very fundamental things, but it's required to know why GST is really required. As you know, the excise duty, service tax and the VAT, these are the three major players as far as the indirect tax when we talk about the GST is concerned. The excise, whenever the goods are manufactured, the excise duty is leviable, and whenever the goods are sold, that excise duty forms a part of the price on which the sales tax is charged. So that's what we popularly call as a cascading of taxes. Secondly, whenever you are dealing with a service provider, and whenever you are a pure service provider, and then you purchase the goods, naturally the goods will attract the sales tax or the value added tax, of which the no input taxes credit is available. So fundamental line is that the tax is becoming the part of a price. Now ideally, what is the principle of the taxation is that the tax should never form part of a sale price. The tax component and the sale price of that particular goods, or as the case may be service, should be distinct. I should know what is my tax component and I should know what is my sale price. So whenever we talk about the cascading of taxes, what it really means is that the tax is forming a part of a sale price. You cannot distinguish from that sale price what is a component of the tax. Am I right? So naturally, this particular, what are the benefits of the GST is the removal of the cascading, simplified tax, by removing the multiplicity of the taxes. As I said, these are the three major taxes that will be getting subsumed under GST. Then some of the minor taxes must have discussed in the morning, which are the taxes that are going to get subsumed under the GST and what are not going to get subsumed. So these are minor taxes also will get some type of a subsumption under the GST. And there will be a uniformity as far as the business processes are concerned all across. So today you will be required to have a different type of compliances. If you go for a Maharashtra, if you go for a Gujarat, that sort of a compliances will not be there. There will be a there will be a uniformity as far as the compliances of the business process are concerned. So that will be a great advantage. So even though you do start doing business in Maharashtra or Jharkhand, the procedure that will be followed is going to remain same. That is what we really expect, or that is what really is what we can call as a cardinal principle of the GST, is that basically it will be a tax rate which will be uniform. Probably there will be only a leverage of a band. I mean, whenever you are talking about how it is going to have a uniformity all across the country is the fundamental question. So as far as the uniformity all across the country is there, the tax rate on goods or the services will be uniform, but there will be some leverage given to each of the state, what we popularly call as a band. So every state there will be a fixed tax rate and a band which will probably will not exceed 2%. Don't take my word, but that's what that is being discussed. So everything there will be a tax rate and a band of 2% within which the state can make the changes, state or the union government. So that band will be there. And secondly, there will be a uniformity as far as the business process are concerned. Basically, what we really talk about the business process mainly are the registration, return and the payment. So these are the three fundamental processes which the taxpayer really need to have interaction with the state government or the tax administration. So there will be a uniformity as far as this business process are concerned. So what is really going to change under GST? As you know, state doesn't have a power to levy a tax on the services. That will be garnered after the introduction of this constitutional amendment. And secondly, the center doesn't have a power to levy a tax on the trade. So that is how these will be additional powers that will be availed by the state and the center. The set off and vice versa, service provider will get the ITC about the goods and the goods manufacturer will get the ITC about the services. This I suppose you have covered, no? This also components and all that. Constitutional amendment you have covered, no?
Yeah.
There is no reaction from you that as far as the constitutional amendments are concerned, whether you welcome that 1% levy, that is always being a very hot and debatable issue.
Do we have a choice?
Yes, minimize the effect of this.
Huh?
Select committee said only on supply per consideration. Limited to that.
But do you really?
One GST.
One GST. But it's a federal structure, so you can't help it. I mean, that is how the GST has to come. The people are saying now that will be a three tiers of GST. You are talking about single. Now, as you know, the entry 52, if you have gone through the constitutional amendment bill, entry 52 will be abolished. So entry 52 gives me a power to levy a tax on the entry of goods into the local area, right? So after LBT, everything will go. So how does municipal corporations has to survive? So there is a demand now that the GST has to have three types of structures. One is the center, one is the state, third is the local body. So, it's naturally, I mean, if you consider a BMC, structured like a BMC, which has got a tax revenue to the extent of 14,000 crores, out of which 7,000 comes only to the octroi. And if you take an example of a Mumbai, everything. So naturally, that is only a concept that has fallen from the air, that GST should have three components. Everywhere other countries do have, but local bodies, the entry 52 will be abolished. So there will not be anything like a LPT. LPT has already gone, but the octroi will also go. So that is going to be a very major change as far as the state of Maharashtra is concerned. The other states don't have that much of problem because they don't have the octroi or the LPT. For Maharashtra already we have abolished the LPT. Now octroi will also go. Tax on advertisement, because that will be a subsumption of the services. And 62 is the entertainment tax unless and until it is being levied by the local bodies. Lottery betting, the minor taxes that will also get. Okay. Now again comes to the business process part of it. What will be the threshold? You are free to stop me anywhere. I don't want it to be a very unidirectional flow. Please. Because when threshold and dual authority is also being covered. No reaction to that? Do you really want a dual control?
Just we don't want development has been abolished.
Huh?
Just now you told that LBST has been abolished, but due to your latest notification, the LBT has come back in a different form for the big business houses, where the turnover is beyond the threshold of 1 crore or whatever. So will that be there even post GST, or that will once again abolished after implementation of GST?
Right, LBT that has been abolished from this 1st August. Not 1 crore, it's 50 crore. So 50 crore and above is totally revenue decision based on the revenue, because there are only 1162 as on date, 1162 number of dealers who will be paying the local body taxes, which contributes to around 35% of the total kitty to the LPT collection. So that works to around about 1900 crores. That is purely, the decision is purely based on the revenue implication. Now your second question is whether it will continue after the GST. Obviously no, because the constitution will take away the power to levy the entry tax. LPT is nothing but an entry tax. So, and it flows, the power flows through the state list entry 52. So that entry will be abolished. So I will not be in a position to levy LPT, whether on rupee 1 or rupee above 50 crore. Right?
Yeah, based on Maharashtra GDP, have you calculated what should be the revenue neutral rate for SGST, say, percentage?
SGST revenue neutral rate.
Maybe you have worked out for Maharashtra.
If I give you a figure, you will be shocked. My calculation said it should be around about 16 to 17%. See, basically, right now you are getting majority of the taxes at 12.5%, right? Have you studied the IGST? You know the model, right? So as far as the CST is concerned, that will be a total loss of 8,000 crores. One. Secondly, my entry 52 goes, right? So if entry 52 goes, what will be the state burden? 15,000 crore. So 15,000 crore plus 8,000 plus small minor taxes like entertainment, this, that. So the total burden 15 plus 8 plus 2, that is 25,000 crore. Am I supposed to get 25,000 crore from the service tax? Obviously the question is, the answer is no. So what is going to happen? I will be required to increase from 12.5 to what? So let's not go into that calculation part of it. It's nothing going to happen. Because as I said, basically whenever we talk about GST, the fundamental line is that it should be common across the country. So whatever my calculation, because this 15,000 crore burden, that is very specific to the state of Maharashtra. This is not anywhere it has been, no other state is having that particular type of a burden. So whenever we are talking about the revenue neutral rate, the revenue neutral rate will not be there it would have been there, the constitution wouldn't have talked about the compensation. See, what do you mean by a revenue neutral rate? That I am getting a X amount today, it will remain the same, only thing quicker I have to, the tax rate. So, you not have to have any compensation. So, as far as revenue neutral rate is concerned, the work for calculating the revenue neutral rate is being given to a very renowned institute in New Delhi called as the National Institute of Public Finance and Policy, NIPFP, that is popularly called as. That institute is working on that. So whatever the figure that you must have read in the newspaper that GST will have this tax rate, that tax rate, that is being calculated by NIPFP. But let me tell you one thing also, that whatever the figure that you have read in the newspaper is based on the previous constitution amendment. Because they have not considered that 1% now. Whatever we are talking about, the 1% that will be levied in addition to IGST by and retaining by exporting state was not being considered when that figures were published, like whatever the figures that we must have in mind, whatever you must have read in the newspaper. So they are again recalculating that particular revenue neutral rate, and that I suppose has to be less because this 1% calculation will go in the state exchequer. So that again will naturally reduce the